Hey everybody, welcome back to the channel. We are back on another episode of the Daily Recap. It's been a couple days since we've been able to recap what's happened in the stock market. I was traveling. I was at Palantir's AIPCon, but now I am back in the studio, all bricked up, baby. And we got a lot to talk about. We got some macro data today. We got some Robinhood updates that caused quite the flurry in terms of how people were thinking about the newest product they came out with. We've got Palantir with 17 new commercial partners. We're going to be talking about the commercial momentum and some expectations going into Q1. And then we've got a bunch of random headlines from Amazon, Google, Tesla. I got some stats to share with you all in terms of what's going on in the heart of the economy. Obviously, we're going to talk about if we bottomed or not, because we got to talk about that every day to hopefully give us a better understanding of where this market's going. We got a lot to get into. Let's get into it. Let's get into some of the macro data. Retail sales data. U.S. retail sales grew 0.2% in February 2025, recovering from a 1.2% negative drop in January, but it did miss the 0.6% forecast. What declined? Food and gas, which makes sense. Food services coming down about 1.5%. Gas, given energy is down about negative 1% for the month. What went up? Non-store retailers up 2.4% and health stores up 1.7%. Core sales, which is a key metric for GDP, actually was up 1%, which beat expectations. What is the takeaway from this? Well, we need inflation to slow down in the economy. The only way to get inflation to slow down in the economy is if you get a theoretical slowing down of the economy because people stop spending, aka inflation comes down, or inflation metrics currently are lagging to such an extent. My belief is that shelter is a massive lagging indicator for inflation, but that doesn't really matter because the Fed is not looking at whatever Amit believes. They're looking at whatever data the Bureau of Labor Statistics gives them. So at the end of the day, we need inflation to come down on the actual CPI reports that we get from the Fed. Now, last week's CPI and PPI were really good. We came in at 2.8% on the headline. Market thought we would come in at 2.9%, and we actually came in negative on core, which is what the Fed looks at the most. So to me, inflation is coming down pretty nicely when it comes to the headline metrics we saw last week. Retail sales data missing is actually kind of good because even though the consumer is not spending that much, and Delta guidance kind of showed us as well, they think consumer airline fare demand is going down. We also saw a reduction in airline prices and CPI, so that's very consistent with what Delta said. Companies are probably lowering the prices in order to get more demand coming back to travel. But it does seem like if the consumer is not spending that much, that's a good thing because we don't have to worry that much about inflation, which I think is bullish. Now, the bad part is if the consumer is not spending as much, are our stocks going to get hit, especially if you own a Walmart, Costco, Target, even if you own a Google, because those companies advertise on Google. So if they have less demand, they're not going to be advertising as much. I don't think this retail sales data that we saw this morning is painting a picture of a recession by any sense of the imagination, but it is painting a picture of the consumer slowing down a bit. I think we're going to need to see a lot of Q1 earnings data and guidance for fiscal year 2025 to get a better understanding of the state of the consumer. Delta already kind of, again, nudged us by saying, hey, things might be a little choppy, so we need a bit more evidence to see. But in general, it was actually a pretty good piece of data, and the market reacted positively towards it today. We were green throughout the entirety of the day, except for the Mag 7. Like everything was green today, except the Mag 7. Microsoft and Apple were slightly green on the day, but pretty much everything else was down. So it's like the market almost rotated into everything besides tech. And part of the reason is because inflation is going to slow down because retail sales are slowing down. You also had consumer confidence last week that was slowing down. So realistically, what we're seeing right now is the consumers being a bit more conservative, pulling back. That might be what you need for inflation to come down. And if inflation can meaningfully come down, hopefully we get closer to a rate cut. Okay, next update is on Palantir. They announced multiple new commercial customers, about 17 of them in the past 48 hours. Pretty damn incredible. And they kind of bombarded us with a ton of press releases over the past 48 hours. I was talking to Lisa Gordon, who's the head of PR at Palantir, and I was making fun of her because I was like, hey, you made my job really hard for the past 2 months. Like I cover Palantir every day, and there's no press releases to cover. And she started laughing. And basically they were hoarding them up until March. And now they've just unleashed a gauntlet of these press releases. You have Archer, you have Databricks, you have Qualcomm, you have R1, you have Saildrone, you have Walgreens, and you have a ton of different companies in Warp Speed, which is Palantir's new manufacturing OS initiative to bring back American manufacturing to the United States, because a lot of it has gone abroad. And you've got companies there from Redcat, which is a drone company that I know a lot of you guys know about, Epirus, Saronic, Sierra Nevcorp, and URSA Major Tech. So they announced a lot of new commercial partners. As an investor, I think Q1 is going to be really good. I mean, I think we're growing well above 30% in Q1. I know they guided for about 31%. I think we're going way higher than that, just based on the momentum that I'm seeing right now. I mean, like it's hard to deny when you have these many customers. Qualcomm, big name, that stands out. KKR, investment firm, that stands out. Archer, I know a lot of people are interested in that one. Walgreens is a big one. Saildrone, I actually got to see Dr. Karp and the CEO of Saildrone sign their partnership together at AIPCon. That's going to be really amazing. R1 is a healthcare company. That CEO and Karp did an interview today on Bloomberg. I'll link that in the description as well for those that want to check it out. And then Databricks, which a lot of people felt that Palantir was in competition with Databricks, and they still are in competition. But I got to speak to the head of federal at Databricks. That interview will be coming out in a couple of days as well. And basically he said, look, are there some parts where we compete? Yes. But Databricks' DIP, their data intelligence platform, mixed with Palantir's ontology, has a lot of symbiotic ways in which they can work together. And in fact, he said one of their clients that was using both of them separately came up to them and said, hey, can you guys just work together? Because they would make our life a lot easier. And that's when Palantir had the idea. This was, I believe, 5-6 months ago, where they were like, we might as well work together. And then over the past 5 months, they've been plotting this. And then they announced their partnership on Thursday at AIPCon. So I think it was a really awesome conference. They announced a lot of different commercial customers from an investing perspective. Look, they're getting more deals. And this is kind of what we've been waiting to see for Palantir, to get a ton of deals. It's just we thought they would happen in January, February. We had nothing in January, February, everything in March. And now it's just going to be a question of what Q1 growth looks like. But Palantir in general, commercial customers not slowing down. International commercial growth, if that can start picking up along with international government growth, that would be amazing. But so far, U.S. commercial, Palantir continues to crush it. Okay, next quick update is about IPO. So Klarna, which is a popular buy now, pay later company, I believe in Sweden, they've replaced Affirm, which is an American buy now, pay later company, as Walmart's exclusive buy now, pay later provider through OnePay, which is Walmart's financial tech division. There's nothing much to say on this other than I thought it was really interesting that Affirm lost this deal, because I thought Affirm was one of those fintechs that, you know, was really entrenched in the BNPL space. And I guess Klarna, for some reason, was able to dethrone them in the eyes of Walmart. But number two, I just want people to know, I think this deal is because they're juicing up the IPO. Like, I have zero interest in buying the Klarna IPO. I hope I'm wrong. I hope it goes up and people make a ton of money. But a buy now, pay later fintech that is taking a massive valuation cut from 2021. It was valued at $48 billion. Now it's valued at $15 billion. Yeah, that's just not exciting. I mean, I would rather buy PayPal, quite frankly. I think PayPal is pretty undervalued, and they're buying back a lot of stock compared to Klarna. Granted, I haven't looked at all the financials of Klarna. It's just in this environment, like Nvidia, PayPal, some of these stocks that are still trading at these multiples, Google, are more attractive to me than Klarna. But I think they're doing this before the IPO to get people excited that, oh, Walmart is the exclusive partner of Klarna for IPO. So one thing I think people should watch out for is that before these IPOs happen, there will be deals that try to juice up the IPO, make the IPO seem more appealing. I don't know if 2025 is the environment where buying IPOs makes sense. I really don't. I'm probably not going to be buying any IPOs this year unless the valuations truly become amazing, but they're not going to be going public if the valuations are amazing. Like, most likely than not, they're going public to raise money. So there's going to be an elevated valuation, especially in this environment. So yeah, any thoughts that anyone has on Klarna versus Affirm, let me know in the comments. But that was a big piece of news I saw this morning. I didn't expect Affirm to lose that contract. Their stock was down about 4% of the day. Actually recovered. It was at 42. It was down about 15%. Then it closed only down 4% of the day, showing some nice recovery in the broader market as we ended green for the majority of stocks today, again, outside of the Max 7. But yeah, I do think IPOs are coming back. It's going to be a question of how juicy these IPOs are and what deals they announce before they end up going public. Okay, next update we have is on Robinhood. Let's spend a little time on this. Robinhood has officially launched prediction markets. CEO Vlad Tenev stated that prediction markets are truth machines. We're starting with politics, economics, and sports, and we will continue to broaden the coverage over time. As with any market, they will become better the more liquid they are and the more people participate. Mizuho reaffirmed their $80 price target with an outperform rating, and they believe that Robinhood is venturing into multiple new verticals. They like the betting vertical that Robinhood is getting into with sports betting, eventually politics, economics. It's sports betting. They call it event contracts, but essentially it's an event contract, and the event is you're betting on a binary event, right? It's either going to happen or not happen, or the person's either going to win the game, not win the game. So from that perspective, it's essentially betting, basically gambling. And to me, this just adds moves to their recent expansions into credit cards, futures, index options, etc. Like, the company's expanding massively into a variety of different verticals, and I really like seeing them try all these different verticals. We don't know if all of them are going to be successful. Like, we don't know if prediction markets are actually going to be successful on Hood, but they're trying. And I think given the success they had with the election betting, they're now doing it for the NCAA tournament for men's and women's for college basketball. That's their first foray into betting this year. They tried to do Super Bowl, but then the CFTC shut them down. So I think it's something they should try, and I think it's something that can be very lucrative over the long term. Now, on Twitter, when I put out this news today, I just got a lot of people that, and let me know if you're one of these people that are watching. I would love to know your thoughts on this. But a lot of people that just felt this is Robinhood corrupting the investing process. I could not disagree more. I don't think there is an argument here. And I'll make my argument very simple here. People are saying when you put gambling in the same app, that is a bad thing for Robinhood because you are encouraging a gambler's mentality. Crypto, to me, is gambling, and options are gambling. The only thing I would say is not gambling is the stock market, even though that's also gambling. But at least you can buy and hold something forever, and as long as it doesn't go bankrupt, technically you don't lose, right? Even though you can be a bag holding forever. But crypto is gambling, dude. Come on. Let's not kid ourselves here. Crypto's gambling. And I'm a big proponent of crypto. I love crypto. I think Bitcoin makes sense. I think there's a long-term thesis. I think it's a hedge against the insane money printing that our Fed does. Like, I think there's arguments that are qualitatively tied to the success of asset classes. But you can't tell me crypto is not one of the biggest casinos out there, especially with the volatility that is implied inside of it. And then options have an end date and a beginning date. So it's like if I buy a call on this stock, it's $10. I think it can go to $15. I have a month or even a year for it to happen. Like, you go out on the street and tell someone that is investing and not gambling. Because I think anyone who's not familiar with the stock market, they would look at you and be like, oh, that's gambling. You could lose all your money if this thing doesn't get to this level and you only have a year for it to happen. Well, what if this happens? What if that happens? That is obviously gambling. Now, if you buy the stock, you can hold it forever. So I guess there is a bit of a difference there. But still, Robinhood's already encouraged tons of gambling with options and crypto. So to me, I'm not going to be betting on the NCAA contracts because I just don't care about basketball. I don't watch it enough to know. But if someone does the due diligence and sophisticated research to find out if Kentucky can beat Duke, and quite frankly, they maybe have a lot more data to find out if Kentucky can beat Duke than you have to see if Netflix is going to beat on their quarterly earnings. Why are we opposed to letting someone bet on that, especially as an adult? And if they lose all their money, just like I lost a ton of money, pretty much all the money I had a couple years ago when I invested in some stupid biotech stock that I thought would cure all the diseases in the world, and I'd lost about like 20 grand on that. Like, I learned my lesson and I don't do that anymore. So like this concern that people have had to me is just hating on Robinhood. People hate a company that's trying to innovate. They don't hate the idea of it. They hate of gambling. And if they do, then it's like, okay, then close down like casinos and like close down Vegas. It's like, I just think concerns are incredibly elementary here. They're not going at the heart of the problem, which is that they don't like that Robinhood's causing all this innovation because they don't like Robinhood. But you can't tell me that gambling deserves to be in a separate app, because then why isn't options and crypto in a separate app? You can't tell me that gambling being on a tab next to you makes you more likely to gamble. It's like, no, what makes you more likely to gamble is being a gambler. Like, if I actually want to gamble on the NCAA tournament, even though I have no idea who's going to win, I don't keep up with basketball, I have a problem with betting on stupid shit, and I'll probably learn my lesson as I lose money. But that is not Robinhood's fault. And I think it's very, very, very weird, and it's an incredibly bad slippery slope to assume that it's the company's fault. So I'm long hood. I think this was a great deal. Robinhood was up 8% today. Makes sense. I think they're going to crush it, and hopefully they can expand prediction markets to a lot more events that we see across the entire industry. As Vlad said today, capitalism's pursuit of truth kind of embodies itself in prediction markets, and I think that's a strong philosophical way to justify that Robinhood is going after this entire market. Okay, next quick update on Google and Amazon. So first off, from Amazon, they're introducing a premium tier to its next generation Alexa devices enhanced by Alexa AI and edge processing chips for quicker responses and improved privacy. Panos Panay, the device's chief, insisted that I want perfection in every single product. The company may expand into AR glasses and wearables soon. I really don't know if Amazon's AI is going to be in a wearable device soon. Maybe it is, maybe it's not. Look, I think it's cool that they're expanding and they're trying to do this. I don't use Alexa ever. And maybe it's just me, but if anyone uses Alexa, please let me know in the chat. Hopefully I'm not waking up anyone's Alexa by saying this right here, but I don't use it. I've never used it. I guess people do use it, and that's why they're trying to create a next generation tier. If this is another way for Amazon to make money in terms of a subscription, Alexa Plus program, then I think it makes sense. But I personally don't use Alexa. Could it be an AR glasses and wearables soon? I wouldn't go against Amazon from trying because they take risks, and maybe that ends up working. but personally, just not an Alexa user. What I do think we are going to see is the embodiment of voice and AI start to become more realistic. I mean, this idea of talking to Grok, talking to ChatGPT, like it's pretty obvious you should be able to talk to Siri, talk to Google Home, talk to your Alexa, and that uses AI to make sense of what you're saying and then actually follow through on the results. So yeah, I mean, it makes sense that they're going for this. Google, update on them. They are negotiating to acquire cloud security startup Wiz for about $30 billion. Now, if you remember in July 2024, Wiz and Google were thinking of a buyout at $23 billion. In the last week of negotiations, Wiz pulled out. The founder sent an email to his team, his employees, and said, hey, we think we're going to be $100 billion in 5 years. We're rejecting $23 billion. Now they're coming back. Wall Street Journal says there's a talk for $30 billion. I think it would be great for Google. They need another part of the enterprise cloud part of their business, in this case, cloud security, to deepen the relationships they have with customers and expand the amount they can sell into the enterprise. So I think it'd be a great deal. For Wiz, I'm wondering, wait a second. 5 months ago, this company thought they could be a $100 billion company. Now they're trading at they're perceived to be trading at a $30 billion premium versus a $23 billion premium. Has something happened in the environment, macro-wise, that's getting this company to feel unsafe about going on the journey alone? And maybe just based on the volatility we've seen, maybe this guy's thinking of his net worth and he's like, dude, I can make a couple billion if I sell this, versus try to do it myself and maybe get to 100 billion. I mean, if they went public, obviously their stock would be treated in a very harsh way, like every stock is being treated right now. So I think we might see, going back to the IPO discussion, either more companies stay private or say, hey, big guy, Trump's in office, Google, maybe you can acquire us. Maybe Biden wouldn't have let you acquire us, but Trump's probably gonna let you do whatever you want. Yeah, if you got 30 billion, we're willing to sell. And I guess we're going to see if that advances anytime soon. I think personally, it would be good for Google. Bitcoin update. MicroStrategy purchased 130 Bitcoin from March 10th to March 16th with an average price of 82,981. Cost them 11 million bucks. They now hold 499,226 Bitcoin. It was just funny because it's like Saylor usually buys 2 to 3 billion worth of Bitcoin, not 10 million. But they found 11 million hiding under the sofa and they bought 130 Bitcoin today. In terms of the Bitcoin ETFs, we continue to see negative outflows. On Friday, March 14th, we did have a positive outflow of 41 million. As of the time I'm recording this right now, we have a positive inflow of 105 million. On Friday last week, it was an inflow of 41 million. But March 6th, we lost 134 million. March 7th, 409 million. March 10th, 369 million. March 11th, 371 million. The ETFs are not bidding on Bitcoin. The government's not bidding on Bitcoin. Saylor's trying to bid with $11 million. I guess the question remains, who's going to be bidding to get Bitcoin to go to a higher level? And maybe we just need a more risk-on environment. But right now, Bitcoin continues to hold the 80 to 85,000 range. All right, final update for the day in terms of some of these stats that I want to share with you all. So, number one, 91% of the S&P 500 stocks are now trading above their 5-day moving average, the highest since December 2023, potentially marking a bottom as we traded below the 200-day moving average for the past 5 days on the S&P 500. This is the longest 5-day streak since October 2023 that we've been trading below the 200-day moving average. We tried to capture today. It's about 572. Ended up short at 567, but got up to 569. Hopefully tomorrow we can make a third green day in a row and get to that 200-day moving average. Second, egg prices down 58% this month. I mean, egg prices are coming down. That's a good thing for inflation, good thing for America, good thing for consumers, and overall a good thing for families in the United States. Third, the stock market has been in extreme fear since February 25th, marking the longest stretch since 2022. Again, another bottom indicator. This is the longest stretch of extreme fear since February 25th. Since February 25th, the longest stretch since 2022. The question is, do we have enough tariff volatility to die down? Trump did not talk about tariffs for the past 48 hours, not on Friday, not today. He talked about a lot of stuff today, a lot of random headlines, nothing about tariffs. Maybe we are getting to the point where he's not going to discuss tariffs anymore, and that could help the United States, definitely help the stock market, but we've got to see if that happens. Fourth, the US dollar is on pace for its lowest close since October. This is very good. We need that dollar to come down. This is going to be good for the trade deficit. And then Warren Buffett, fifth, has raised his stake in Japanese trading houses today, showing optimism within the Japanese market, even as the US market continues to show signs of weakness. Buffett still has about $325 billion in cash. Maybe he's starting to nibble in different places, if not in the United States, then maybe inside of Japanese markets, but it looks like he's seeing some opportunity in different places, but maybe those opportunities are not necessarily in the United States. Sixth, retail investors heavily bought U.S. stocks and ETFs last week. We got some new data this morning with purchases totaling about $3.2 billion over Monday and Tuesday last week. This was the largest 2-day buying spree since August. And over the 5 days ending on last Tuesday, they invested $8 billion in equities. This pushed the 5-day moving average of retail flows to $1.6 billion, the fourth highest ever recorded. Again, potentially showing that we might be getting to a bottom on this market as retail starts to come in. By the way, money market funds lost about $1 billion last week. Nothing too crazy, still 7.02 trillion on the sidelines, but $1 billion we did lose from money market funds last week. Finally, U.S. Treasury Secretary Scott Bessent, this is our 7th macro update. He suggests that intervention in 2006 or 2007 could have prevented the 2008 downturn. And he's using this analysis to make the argument, quote unquote, corrections are healthy. They're normal. What's not healthy is straight up. That's when you get these euphoric markets. So essentially, he went on Meet the Press on Sunday and he said, look, I know people are upset the stock market's going down, but it's a healthy correction. If we don't have a healthy correction, you're going to get a nasty downturn, which he's not wrong about. 2006, 2007 could have been avoided, or 2008 could have been avoided if we kind of pumped the brakes in 2006, 2007. Is 2025 a 2008 type of moment where we need to pump the brakes and chill out for a year or two before we get back to being bullish? One can argue yes, one can argue no. I think there's somewhere in the middle of nuance there. But I do agree. Like, as much as I love Robinhood, it probably did not deserve to be $65 in February of 2025. It deserves to get there, but over time. And because we're pumping the brakes, we're chilling out a little bit. We're getting these valuations to reset. We're letting earnings growth really get priced into the valuations. And that's why these stocks are becoming more cheap. I do think that's a broader, healthy thing to happen for the U.S. stock market. And so I can't disagree with Bessent. Now, that 10-year is not coming down. We talked about this a lot on the show over the past couple of weeks, that their main focus is to get the 10-year to come down, to get mortgage rates to come down, to get interest rates to come down. Unfortunately, that 10-year is still at 4.3%. So this thing's got to come down if we're going to have growth slow down. And if it doesn't come down when growth slows down, then we have stagflation. I think they'll be able to get it down. I think inflation is coming down, but we got to see that 10-year come down. Bessent, Lutnick, Trump, they really want to see that 10-year come down in order to say, all right, now we can get back to having a stock market that actually does well because interest rates are lower. The question is going to be, at what cost do we need to get that 10-year to come down in order to get interest rates to come lower? All right, that's it for me. Thank you, everybody, for listening and watching. We are back once again in the studio. Excited to be with everyone every single day. We'll be here every single day on the daily recap, and I'll be live for the market open, market close. Big events this week. We have FOMC on Wednesday, March 19th. That's going to be important. Probably not getting a cut, but we'll get to analyze every syllable that J. Powell says. And then Jensen is tomorrow at GTC, so I'll be streaming that at 12:40 p.m. Eastern Standard Time, and we'll get to see what Jensen thinks about the future of AI. All right, that's it for me. Thank everybody for listening and watching. Thank everybody for being here for the past week, especially when I was sick. I really appreciate everyone who reached out and wished me well. Feeling a lot better now, so it should be good to go. Yeah, enjoy the bloopers. Hey, everybody, welcome back. That's going to be a bad blooper, bro. Okay, next quick update. I thought this one was interesting. Klarna has